begin the support resistance workshop now. So could you tell me right now, just on this weekly chart, what processes would you use to set support and resistance?
So I will try to use the replay function and move back to say April or July. I will try to analyze the future price trend and buy the candlestick.
Do you see any support or resistance here?
Maybe thirty six
So you
thousand.
go 36 about here.
Yeah, thirty
That's why
six
you draw it?
thousand. Yeah,
Okay,
that is the
cool.
support.
Thank you, Joseph. And can you just tell me why you picked this level?
Because on the right side, I saw two long weeks try to break this level down.
Hmm.
Those three weeks failed, and in the middle, I saw one, two, three, four week try to break down.
Okay, that makes sense. Now, Sam, could you do the same for me?
So I definitely would see one around 30 to 32 area, probably extended out past 2021. It's just because it seems like it's like a multi-year,
Hmm.
multi-month at least support area. There's tons of wicks. When price first came up in 2000, what is it, 20, the end of 2020, is it, or early
Hmm.
2020, came back down to test that level as well
Yeah.
successfully. Um, in in the middle of 2021, it also came back down again, and now it looks like it's could be on its way back. I can see where Joseph is saying the 36th level, but I see that as kind of like a potential minor support, just
Hmm.
because we have less data points to the left, and also price seems like it could be coming down anyways. So I would draw one there. I would also draw another around 40-ish area. Let's see.
And
Wait.
what's
Oh,
your
sorry.
reasoning for the 40-ish area?
This is where I start to, second guess and question myself.
This is really useful. All of these are, I'm trying to get an insight into your brains, how you guys are viewing this, so I can more directly address it rather than, just do another equivalent of a video. Joseph and Sam, there's one key thing you guys are currently both missing in your processes because, like, theoretically, there is an argument that this every single one of these levels is a support or resistance, and I am almost certain that there is someone out there who is going to use one of these levels to make a good amount of money with them. And for their strategy, it works. So the missing component is, what's the base theory? What's the base idea behind these? And what anchor are we using to mark out our levels? So what both me and Spicy have is an anchor that really pins these down and gets rid of the noise, because this is all noisy. The first thing I want you guys to do when you look at a chart is change your mindset. You're not looking to draw levels. You're looking to draw relevant levels that are going to make you money. Because if, like right now, who cares if support is at 65K, or it's at like, is 60K the breakout level, or is it 66K? Like right now, for most of us trading, especially for people going through the program on lower time frames, this is irrelevant. This does not matter one bit. So first, let's localize and focus on the area of the chart that matters. This is getting rid of complexity. So if we're trading, say, the lower time frames, we'll go to the 4-hour. Now, what I know Spicy likes to use is, Spicy, do you like daily or weekly open close? I can't remember which one.
It was the previous day's high and the previous day's low.
So here's what Spicy, for example, will do to mark out key support and resistance or key levels that he's going to be watching. This is the previous day's high. Here's the previous day's low. Now, notice how if we're trading higher time frames, this isn't very useful. So if I'm making decisions trading on the free day, these two levels aren't really going to matter to me. But Spicy, who is trading on the lower time frames, normally the 1-minute chart, he's now got two levels that every single time are going to be exactly the same no matter what. Now, this is pretty much the highest degree of accuracy you can get with any sort of level, and this can be the anchor points at which everything else is based on. Now, I'm not going to go into explaining Spicy strategy, but rather this was expressing like the extreme end of zero room for error that you can address. Now, I'll explain how I personally like to look for these levels. So for me, I very much care about market structure, and that's highs and lows in the market. So if we go back to the previous example, I think we were back around here. Yeah. So we marked out, I think you shared 30 to 32K around here. And then Joseph, you said about 36K over here. And then we also had one other level, but it's not important. So the first thing I like to look at is the structure. At what point does the market set really clear highs and lows? So here we have a high. So this is a higher high. This is a higher low. And then we get the same thing repeatedly happening again. There, there, and there. And you can see the price marks out a little bit here, and certain levels are just not included, like as in this micro up down here. I don't need to care about. I'm trying to get the big picture here. And this really helps inform my decisions and my trading. Why? Because I make money when key levels break. That's when I make money. When, for example, if we go back to here, this is a really good point in the chart. When you ask me what support and resistances are you watching, it's super easy. I'm watching this high, I'm watching this low. Now, it doesn't really matter that much if you set 40K or 40.5K when you're trading these higher time frames. You can move up and down a little bit as long as you're generally looking at the same point on these higher time frames. Normally, the area isn't one specific level. It's more like a zone like this. So we look at the structure, and then I'm looking for breaks. So, oh, it broke. That's my signal. This is the key thing I'm looking for the structure to break. So my support and resistance is going to be marked out at these structural levels. Now, let me get rid of this noise here and this. And then if you take a look, we set the same thing again here. There's my high, there's my low, those are my anchors. Now, this level breaks, that's normally a signal. It's not going to work every time. And in fact, this time it chops through it. And what happens? When my level chops through, invalidated. We no longer care about that level. So now that's gone. So when my levels get chopped through, they no longer matter to me. They become less important. And we go to analyze a new level and set a new level there. And we set a new low here. So for me, the levels adapt. And once they get chopped, they're no longer of interest to me. And this continues throughout the movement. So here, this level breaking triggered the breakdown. This level broke, loses interest. This level broke, but it came back up and acted as resistance here. So now this 40K level here is suddenly really interesting to me. And this support that we were saying about 30 to 32K, look, it held really nicely there, structural level over there. Now these become key areas of interest. Now, psychologically, what am I thinking here? That when the market loses a certain level, there's going to be a big reaction from people. Or if the market holds a certain level, people are going to react a certain way based on that price. And once the price stops chopping through, it's showing you that people no longer care about that level. Once you have evidence, recent evidence, that people no longer care about that level, you can take it off your chart because you don't need to trade that level. So two important concepts I'm trying to share here. One is that both me and Spicy are using levels based on how we want to trade. And we're only watching levels that matter to our trading. So if something happens, either this level is going to be an entry for me, or this level is going to be an exit to me. If this level has no purpose being an entry or exit to me, or maybe a near-term exit at the very most, it doesn't go on my chart and it's not of interest to me. So those are the key concepts I wanted to communicate here. And now I'll come to the most recent chart. So you take a look at these levels and let's wipe it out completely. Well, actually, you can see this level here, the 30K-ish, and you can take it up to 32K. It's held really strongly over here. And structure-wise, this level here, it's a little bit chopped up. And in fact, this level is much more accurate here now, synced up with this low here, this high here. So for me, you can see my anchor is structure. I'm looking at key turning points and structural points in the market, and then everything else is secondary. I've got my anchor, but now I also know, wait a second, 40K is a really key psychological level. So this 40K level, it has more significance and it behaves differently. And when I trade in my journal, as I trade this level, I have an extra note. That note says also psychological level. Then I get data on how levels behave if they have these additional features to them as well. So key anchor point. And then the second thing, which I didn't actually mention earlier, was do we have, what's our margin of error? This has a higher margin of error than Spicy's technique does. But I trade on higher timeframes. Spicy trades on much, much lower timeframes and a lot more frequently. So his levels change all the time. Therefore, having that like no-brainer, there's nothing that can go wrong here with using these two levels makes a lot of sense. Now, you can do the exact same thing on higher timeframes. If you guys don't like this sort of method and you want something with close to zero room for error, well, you can just remove these, go to the monthly. Okay, so the key levels I'm going to always watch are the previous month's open, or let's just say high and low. So these are the key levels I watch. And you can take that even further. Maybe you need a bigger range, so you use the 3 months. Whatever you want to use, you can. And these sort of things have zero room for error. My one has a lot more room for error. Explaining these concepts, does that? Yeah, Sam, please go ahead.
Yeah, that's super helpful. Like I love how you kind of delineated the difference between, you know, like the absolute no error way of things versus, you know, kind of more discretion. And I think, yeah, maybe if you were trading higher, like since or before this program, I've basically been trading higher medium time frame. So I think that's super helpful to use like the monthly and stuff. What I'm curious about is when you when you drew the level just now, you know, we had the 32, which is where your cursor is at now, the 31, 32, or 30 to 32, and then you had, I think, the 40 level, which is a key psychological level at 40.
Yeah.
So so before this whole breakout that happened since October, right, and price is kind of like coming up to 40, it's like 34, 35. How like if you're using your logic, right, like kind of through that method of more discretion, and you're looking to the left of the chart at that point before you knew this breakout was going to happen, right? And you see, what is it, 2022, early 2022 to about April-ish, there's this huge chop around 40, like it's just like not being respected at all.
Yeah.
You like what you know, are you still going to draw that on the chart, or are you going to be like, okay, you know, I mean, obviously it's been respected.
I can address that.
Yeah. So like,
yeah. So Sam, first thing I wanted to point out is for everyone to just look at this level here. And Nick, I'll come to your question in a second. I just want to address that. So look at this 30K level. And all of you, after my explanation, should understand why this, for me, marks the end of the bull trend. If we lose this level here, for me, like my bias completely and utterly shifts. Why? Because this has been a level of extreme importance since Jan 21. Like if a level this important that has been respected every single time since Jan 21 loses, that's a big signal that we're going to continue downwards. So this level is way more important to me than a level like 40K. So in fact, if I'm looking at my absolute most important levels, 40K isn't on it. And in fact, before this, 40K is on it only because it's psychological. And I know that with Bitcoin, there's always some sort of reaction at big round numbers, but that's with every single coin. So outside of that reason, it is not much else. So if I'm trading a breakout, what I would do with the 40K level, for example, would be I would have it marked because it's, you know, the 40K level, but I would have it noted that I'm just addressing this as a first trouble area. How is price going to react to this when it comes to this? And I have specific management rules for areas where I think price might have trouble, and I need to check it. So I don't have a take profit set there, but I have a price alert set there. So if I see price hits 40K and then it retraces X% back to my target, I might have a rule that I'm out. Like, that's me. The position's done. I'm no longer interested in it. But it's not a key pivotal level I'm watching. And based on my analysis, remember, when I say discretionary, I will draw this chart exactly the same every single time I draw it, because it's the same process. It's like, is it a clear structural level? Has it been chopped through? That's it. Like if it's a key structural level that hasn't been chopped through, it's a key level. If you look here, 40K has been chopped through. Therefore, I don't draw it. So my chart looks exactly the same every time. The only place where there's more room for discretion for mine is, well, do you pick 32K? Do you pick 31K? Do you pick 30K? And where exactly on that you go. So mine tends to look a little bit more like a box most of the time, even though I draw levels, than it does this. Bear in mind, so do want to make it clear that it's not like discretionary at all. It looks the same every time because I have clear rules, but it's a wider area than Spicy's. Now, to answer your other question, which, I mean, this year's been really, really easy for me. And it's because, like, just look at this. Since this level here, every single time, the market has just behaved so cleanly through any key structural level. It's just resulted straight in a breakout every single time. And zoom out here. So it's just been such clean, easy price action with occasional consolidation that's required me to sit out. And I'm literally spending 2 seconds here drawing these levels like this. And literally, if you just draw these highs, all you're doing is drawing these highs. Price has done the exact same thing every time to the levels. So that's why this year's just been particularly easy. And draw the low here for that. And that's why 36K was a target. You can see it's just the structural levels and they haven't been chopped through, and price behaves so well. Just everything that's supposed to be a support's been a support. Everything that's supposed to be a resistance has been a resistance. When I say markets in easy mode, this is what I mean, because like this did not work like this in 2022. 2022 was nowhere near as good as this year, but this year's just been extremely nice price action. And look, there's very little chop. Like the only time it chops is price went up and then it came back down. But for me, this bounce isn't really a signal that I trade on higher time frames. It's this break. So until that breaks, I don't have to do anything. The second that breaks, it just goes up again. And that's what makes it really easy price action for me, and shows it a little bit in action of just like the levels. They're very simple, very easy to draw. And I'm doing these in 2 seconds. So stuff might be up off by like 1K exactly, but I'm trying to make the point. Hopefully that addresses that, Sam. And Nick, sorry for keeping you waiting. What was your question?
That was great. Thank you for taking the time. So these are probably pretty basic questions, and if they're answered in the trainings, feel free just to tell me to go watch your training. But
of course,
when you were talking about, so the around, you see the October down there, and that first breakout that it finally got above 30,000, 32K recently.
Wait, recently. Okay.
Recently, yeah. So, you see your line there, and it tried to go up a couple times, never got there. Then it finally broke through. Mm-hmm. So in addition to just breaking through, what else are you like, okay, it's time to get in now? Yeah. Because does it retest or like that? That's where I always have challenges where I draw my support and resistance lines, try and keep it as easy as possible. And then I'm like, all right, well, how can I confirm it? And
so confirmation is what we use. So the type of trading you're talking about right now is breakout trading. And this will happen later in the program, where we'll cover this in detail. Okay. I'll give you a brief overview right now. Don't feel the need to fully understand exactly what's going on, but I want the gears turning in your head and you start thinking about it. So when we trade momentum, we have what's called confirmation. So we know we want to enter when price breaks this level. The conditions we set for this level breaking will reduce our profit, but help avoid fake outs. So fake outs are, for example, when the level breaks, but psychologically, the market doesn't react to it. So the market doesn't care because it didn't go high enough. So it comes back down. We want to avoid these. And if we set the condition, for example, that we need the price to go something ridiculous, say 1K above this level for me to enter, then obviously there's no point, because by that point we've missed the entire move. So now the opposite, if we say the second price touches this level, I enter, then every single time it wicks, we're going to fall out. So we need to develop a set of rules that helps mitigate this. Now, to give you the simplest one is one candle close. Say you set the rule that I need one candle close above the daily level to enter. And as long as I don't get that close, I will not enter. And if you look here, We got one close there. So we got pretty much get about one close above the level before it chops back down. So at this point, our condition was insufficient for this one sample size. Obviously, you want to test this over loads of trades. So say we lose a bunch of money, we review our journal, but we're smart, so we were only trading with $100 while we were developing the strategy. Now we say, okay, let me iterate this. I keep losing trades because of my entry conditions. I'm going to alternate them and then set them a little higher. So now you say 2 candle closes or 3 candle closes and adjust it that way. There's also obviously your exit, so your stop loss, which you can play with the distance there. But the point is we adjust our rules in order to avoid this. So me personally, I like to wait for a specific moving average to cross these levels. I also have my expansion rules. So this is where if my level gets chopped through, I actually adjust my level. So I will take it up higher. It won't go up to here, but my level will go up higher, and I will now have a higher criteria for entry. So now I'm looking for this level, and it helps me avoid more fake outs at the same level. Why? Because I know the market is not interested in that level like I thought it was. Therefore, my level goes higher. Sometimes I have to lose a trade before my level goes higher. Sometimes I take the level, I don't lose a trade, but I see it get chopped through. So this was an example where I was lucky. I didn't lose a trade here because my rules did not meet my criteria for entry. It was just chopping sideways. And even though the criteria was met, before it was met, way too much had happened to show me that this is not what it looks like when an area of interest breaks out. I like to see that I almost don't have a chance to enter. I like to see the market running away from me at my key levels. That's one of my biggest triggers for entering a position like this, where if you're not at your screen or you're sleeping, you're going to miss your position. If you don't instantly enter with a market order, you're going to miss your position. Those are the side of things I know, but don't copy those. I just want you to understand those. Yep. You're going to develop your own. You're going to find your own ways of viewing the market and executing these. With every single thing I'm sharing right now, don't think, okay, Karush uses structural levels, so I have to. Think Karush uses structural levels. This is why he uses them. Spicy uses this. This is why Spicy uses them. Which works best for what I do? Am I better with a bit more discretion? Am I better with something with no room for error? If I don't know, okay, I'll ask the coaches. Or best one is if you don't know, just pick the one that has no room for error. Start there, and you can always change it later. Yeah, Nick, did that answer your question? I know I added a ton to it as well.
That was great. Yeah. And then when you talk about a moving average, what moving average do you typically use? Because there are multiple different moving averages.
So I will answer that question. It doesn't matter what moving average I personally use. Just know that if you use a shorter moving average, then it's the equivalent of less candle closes. If you use a longer moving average, you're just changing the delay before you enter a position. Sam, please go ahead. Thanks for waiting.
I'm just wondering if I guess, yeah, like 10 minutes left. If you could just pull up like any random altcoin like that's just like way more choppy. Like I just want to kind of see how you would address that, or just like thinking through it.
Okay. So this is why.
Yeah, go ahead.
Yeah. So this is where Spicy's method becomes a lot more useful on something like Solana, which is much trickier to look at. So again, it's much choppier, and actually it looks much better now than it did before, but the same principles apply. And the thing is, this is where looking at Bitcoin is what makes me, or has made me, really good. So I don't always trade altcoins, but I do when it's confluent with Bitcoin. I know relative to Bitcoin how altcoins trade. So my baseline analysis for the whole market happens on Bitcoin. So I know if Bitcoin tanks, everything else is tanking with it. I also know that if Bitcoin is likely to break and I see another altcoin edging up to a certain level that could be resistance at the same time that Bitcoin is, that's where I likely just going to break out a higher beta Bitcoin move that's going to just move further than Bitcoin does. So you just get more returns towards the upside. Obviously, it's got risks associated with it. But here, so for example, structural level, unbroken, structural level, unbroken, structural level, unbroken here, and we got one more which set up here. What do we see in every single one of them? As soon as they broke, we got a breakout. Do you see, like, it's choppier, it's harder to see, but at the end of the day, that's the high. We broke, clear breakout, acted as support again, resistance was set there, and we then got a breakout. Same thing here. This is where it crashed out, had a high there. We got another high there. 0 breaks, clean, good. Now, where do you see the next clean levels? Okay, over here, $79. And I shared this on Twitter the other week when price was like floating here. I was looking at $80. Why? Well, now you guys know. The reason I was looking at $80, it's so simple. We've got a structural level that's unbroken. And that's why when we broke something around this level, I think it was 60, my target was $80. It wasn't $70 because why would I pick $70? There's no key structural level that's unbroken there. That's the one there. And now what's my next one? Well, we've got one here, which is somewhat synced up with this low over here. So I'd be looking at 115. Looks pretty interesting there. Remember what I said about psychological levels? There's no way you can ignore a big round number like 100. So that's where we pay attention to how it reacts. And also use a bit of common sense. You say that, look, price can go up 25%. Chances that it goes up 25% and doesn't hit some sort of resistance is not always that high. Although having said that, if we take a look here, we went up 44% without hitting some sort of resistance, bull market things. So what I do is pay attention to how does price react to this level? And does it look like it's going to continue floating to a level which I have marked out as a much more serious one? Then the next level after that, over here, you can see it's a structural low there, really small, but it's still there. And then it was a high there. So we've got 136. Exactly the same process as Bitcoin. And in fact, if you remember Bitcoin, it looks almost exactly the same as Bitcoin did for these levels, almost exactly the same. And that's why, for me, one of my biggest discretionary edges, which again, guys, this is later in the program, what I developed is that interplay between how Bitcoin behaves and how I expect the rest of the market to follow afterwards. Does that answer that? Was that helpful, Sam?
Yeah, for sure. So I just noticed that you would go for the, because there was that big spike, right? That went up above the 115 before it came back.
Yeah, I'll bring that back up. Yeah, I can explain that one. So
you wouldn't go for the high of that one. You would go for like the kind of higher low prior to that at the one.
Yeah, that's because this isn't so for a level to break for me, there needs to be indifference at that level. A clean breakthrough and a clean break back down is not indifference. Indifference looks like action like this. We see something like this happening at a level where it's just chopping around, and the example was the best example was on BTC USD, where I can show you guys. It's one we were looking at earlier, and I believe it was 40K level here. This is what indifference looks like to me. We're just chopping through it and no one cares. Literally we've broken above it 1, 2, 3, 4, 5, and then floated that. So we've broken above and below 5 times sideways indifferently, and we haven't had a clean break to the up or downside during that level. That is indifference to me, not one smooth motion like up down. That is not a clean break. That is not a break or indifference. This is indifference. So if it goes clean up down one single data point, that's separate. That's fine. This is not fine. So that's how I would get rid of levels.
So you view that one on the Solana chart as an anomaly, essentially.
Yes, precisely. So that's anomalies, one way you can put it. Another way you can describe it is that the breaking of this level here caused the breakout, and then price came back down and immediately broke this level. It just did not hold. So this level was a breakout level there, and then it didn't hold there. So like, if I'm going to explain it logically, that's how I would. But as far as my rules are concerned, I need choppy sideways action. Yes, okay. Not one clean move like that.
More data points. Okay, understood. Thanks.
Nice.
Makes a lot of sense.
Okay, awesome. So everyone, I think we can wrap up the session there if there are no more questions. Fantastic. Appreciate it, everyone. Hopefully that was helpful. Thanks for staying behind, and I'll see you all again for the next session or next week. Bye, everyone.
Thanks,
you.
guys.
Bye.
Thanks, Rose.
Thank you.
All right, see ya.
Thank you, everyone.